we've been given different ratios, and the question also includes the format for a profit and loss account, trading and profit and loss account, and a balance sheet. The only number we have is fixed assets to the tune of 1 crore 30 lakhs. Alright, so I'm going to start with that. I'm going to write fixed assets is equal to 1 crore 30 lakhs. And now from these ratios, I identify those ratios that include fixed assets. So we have these two, the fixed assets to current assets. And they have told us that the fixed assets to current assets is 13. 13 is to 11. Okay, and I know that the fixed assets is 1.3 crores. I do not know what the current assets are, but I know it is equal to 13 by 11. Now, I'm going to make current assets the subject of the formula. So it is division, goes that side, it becomes multiplication. This 13 is multiplication, goes down, it becomes division. 11 is division, goes up, it becomes multiplication. Alright, so having done that, I'm going to end up with 1 crore 30 lakhs upon 13 into 11 will give me current assets. Okay, so therefore current assets is equal to 1 crore 10 lakhs. Alright, so we have 1 crore 10 lakhs. Now, the problem is our balance sheet does not have a separate section for current assets. Okay, we have several items. All of these people are current assets. All that this tells us is that the total, okay, the total for all of these is going to be 1 crore 10 lakhs. Alright, so we have to keep this in mind and proceed. The next formula that we have is fixed assets to sales. Okay, so fixed assets to sales is 1:3. So fixed assets divided by sales is equal to 1:3. Okay, and we know that fixed assets again is 1 crore 30 lakhs. Okay, so divided by sales is equal to 1/3. So we basically have sales is equal to 1 crore 30 lakhs into 3, and we end up with sales being 3 crores 90 lakhs. Okay, which is what I am then going to put over here. Okay, and let's see. Maybe okay, let's just try and squeeze it in. 3 crores 90 lakhs. Okay, and yeah, the size isn't big enough, so I'm just going to try and use a 3 crores 90 lakhs. Okay, so we have 3 crores 90 lakhs here. Okay, proceeding, we have our next ratio, long-term loans to current liabilities. Okay, and keep in mind, we've been able to isolate the current assets because we have the current assets as 1 crore 10 lakhs. We are in a position to use the current ratio formula in order to isolate current liabilities. Okay, so remember, current ratio is equal to current current assets upon current liabilities which is equal to 2 is to 1. And we know that the current assets is 1 crore 10 lakhs. So 1 crore 10 lakhs upon current liabilities is equal to 2, and therefore we end up with current liabilities as current liabilities as 1 crore 10 lakhs upon 2. Okay, so we get current liabilities as 55 lakhs. 55 lakhs. Okay, and since current liabilities is directly given to us here, we can simply place it 55 lakhs. Okay, between my handwriting and the size of the table, here we'll have to adjust. Okay, we've isolated current liabilities 55 lakhs. Proceeding, we now are in a position to solve for long-term loans to current liabilities because we have the value for current liabilities. Okay, and this also coincidentally is 2:1. So one more time, long-term loans to current liabilities. And I'm just going to divide this here like this. Long-term loans to current liabilities is equal to 2 by 1. 2 is to 1. Okay, and current liabilities we have is 55 lakhs. Okay, so we have long-term loans, upon 55 lakhs is equal to 2 by 1. Okay, and therefore we're going to get a similar answer as current assets. Okay, we're going to end up with long-term loans, long-term loan equal to 2 into 55 lakhs, which is equal to 1 crore 10 lakhs. Okay, so long-term loan 1 crore 10 lakhs. Now, proceeding further, we have, okay, so let's see what all we are done dealing with. We have dealt with this, we have dealt with this, we have dealt with this capital to reserve and surplus. We don't have enough information yet. But now let's start dealing with the numbers we have here. They've said that net profit is 8% of sales. Okay, so what does that mean? We got sales as 3 crores 90 lakhs, so which is equal to 8% of 3 crores 90 lakhs. Okay, and yeah, it's better to have this. Anyway, 8% of 3 crores 90 lakhs. You all should show it as complete calculation. I'm just going to directly put this number in. 3 crores. Okay, this is 3 crores 90 lakhs into 8% of 0.08. So that is 31 lakh 20,000 is the net profit. Okay, 31 lakh 90,000 is what I'm going to put. Okay, and let me just check that number again. 31 lakh 20,000, sorry. 31 lakh 20,000 is what I'm putting here as net profit. Going forward, we have everything else on the basis of what is called cost of goods sold. Okay, so cost of goods sold, we are going to have to make use of a formula. Alright, so you all need to remember, okay, and I'm going to go ahead and do it here. Always sales is equal to cost of goods sold plus gross profit. So if they've given us the gross profit as 15% of sales, okay, so then you can simply take 100 minus 15 and you're going to end up with cost of goods sold as 85. Okay, so 85%. And in this way, we are also in a position to isolate the gross profit. So how much is our sales? Our sales is 3 crores 90 lakhs. And therefore, this number becomes X, this number becomes Y. We can cross multiply and get both of them. Alright, so as far as the gross profit is concerned, okay, we're going to pick the low hanging fruit. 3 crores 90 lakhs. 3 crores 90 lakhs into 0.15, which gives us 58 lakh 50,000, which I'm immediately putting down as gross profit. Okay, so we have 58 lakh 50,000. 58 lakh 50,000. Okay, so that is our gross profit. Now, as far as cost of goods sold are concerned, okay, my cost of goods sold is going to be, okay, and I'm going to write it down once here because we need to know that number in order to calculate raw materials consumed, direct wages, stock of finished goods. Okay, so it makes sense to once and for all calculate cost of goods sold. Okay, so cost of goods sold is equal to 3 crores 90 lakhs into 0.85. Okay, so we end up with 3 crores 31 lakh 50,000. 3 crores 31 lakh 50,000, and that is the number which we can now multiply here, here, and here. Okay, and we are able to isolate large parts of this profit and loss account by simply multiplying the percentages that we've been given into the numbers. Alright, so first of all, let's just switch this to something that can stick. Okay, so yeah, we are starting with 3 crores 31 lakh 50,000, and the first time around we multiply it into 0.2 to get raw materials consumed. So into 0.2. Okay, and we end up with 6,63,000. Sorry, 66,30,000. Now we go here and 66,30,000. Next, okay, we go back to 3 crores 31 lakh 50,000, and let's see, 3 crores 31 lakh 50,000, and we multiply it into 0.1 to get direct wages, and I think that's very straightforward. If we multiply it by 0.1, it's going to be 33 lakh 15,000. So I'm going to put that in here. Okay, 33 lakh 15,000. For those of you who can't do it mentally, please do it on the calculator. Then we are done dealing with this formula. Stock of raw material that's saying is 3 months usage. We'll come to that later. Okay, gross profit and sales, both of them have been isolated. We have nothing more to do with this. Okay, debt collection, they've told us is 2 months. Current ratio, we have. Okay, so we are now in a position to have dealt with everything. Yeah, we are already over with the current ratio, fixed assets to current assets, fixed assets to sales. Okay, long-term loans to current liabilities. Let's just have a look at what the balance sheet looks like right now. Because if we have capital to reserves. Okay, capital to reserves means equity share capital reserves, and we do not have the total. The moment we isolate the total, we can subtract it from here and then break it up in the ratio 1:4. Right? So our first job is to try and solve the puzzle that we have here. Now, if you notice, we do not have anything else on the right hand side. Okay, surprisingly, they have not told us or given us a slot as far as closing stock is concerned. And you could argue that if they've given us stock of raw materials, then that should be the closing stock. But keep in mind, the direct material consumed formula consists of opening stock plus purchases minus closing stock of direct materials or raw materials. Right, so there is nothing on the right hand side. We've got 3 crores 90 lakhs. Okay, 3 crores and 90 lakhs over here. And we can simply take that as the total on both the sides. So 3 crores 90 lakhs. Obviously in the exam you're expected to do this with separate note numbers for all these calculations. Okay, you cannot roughly do things like this. Okay, so 3 crores 90 lakhs we write on both the sides. Okay, 3 crores 90 lakhs on both the sides, and then we subtract everything on the debit side. Remember, at the end of the day, this is the debit side and this is the credit side. So subtracting 3 crores 90 lakhs and all of these numbers, we'll be able to isolate works overhead. So going forward, we have 3 crores, okay, 3 crores 90 lakhs minus 58 lakh 50,000 minus 33 lakh 15,000 minus 66 lakh 30,000. Okay, so we end up with 2 crores 32 lakh 5,000. 2 crores 32 lakh, okay, and 5,000. So we have a gross profit over here which is carried down, and then it goes down there and it is brought down. Okay, so the same 58 lakh 50,000, the same 58 lakh 50,000 is what we will write here, and that will also be a total because there's nothing else on the credit side of the profit and loss account. Okay, so we write it down as our total on both the sides. Okay, and why? Because it is bigger. The heavier side is written on both the sides. And now we subtract this number. So we take 58 lakh 50,000 and we subtract 31 lakh 20,000. 31 lakh 20,000. Okay, and we end up with 27 lakh 30,000 as our selling and distribution expenses. 27 lakh 30,000. Now, the same net profit that you have here, okay, ends up becoming part of the reserves and surplus. But we do not have means exactly to go about doing that calculation. We have total reserves and surplus, which is based on a ratio given to us here. Okay, so our entire headache with dealing with the P&L account is now over. Our next step is to isolate. Our next step is to try and isolate the current assets, knowing fully well that our total current assets, remember, is 1 crore 10 lakhs. Okay, so if you think about it, all of these numbers put together is 1 crore 10 lakhs. Now, what data have they given us as far as raw materials consumed is concerned? We have 20% of cost of goods sold. Okay, apart from that, what other information have they told us? the stock of raw materials is 3 months usage. What is an entire year's usage? An entire year's usage is 66 lakh. Okay, is 66 lakh 30,000. So if an entire year's usage is 66 lakh 30,000, I simply have to multiply 3 by 12 because it's 3 months, 12 months in a year, into 66 lakh 30,000. And by doing that, okay, we take 66 lakh 30,000 into 3 by 12 and we end up with 16 lakh 57,500. Okay, so stock of raw material 16 lakh 57,500. Then as far as stock of finished goods is concerned, they said it's 6% of cost of goods sold, which we already know is 3 crores 31 lakh 50,000. So may as well just quickly finish it. 3 crores 31 lakh 50,000. Okay, and am I missing a zero? Okay, 3 crores 31 lakh 50,000 into 6%, so 0.06. So 19 lakh 89,000 is my finished goods. 19 lakh 89,000 is my finished goods. Okay, then proceeding further, we've been told that debt collection period is 2 months. Now you need to keep in mind this debt collection period is based on sales and they're telling us all sales is credit. Our total sales is 3 crores 90 lakhs. Okay, so it's going to be 15%. Okay, and sorry, it's going to be 2 months. So it's going to be 2 by 12 into 3 crores 90 lakhs. So 3 crores 90 lakhs into 2 by 12 is 65 lakhs, which I can then put as debtors. Now, if you notice, there's no adjustment for cash, but we know that the total current asset is this much. So now we can take the total, which is 1 crore 10 lakhs. Okay, so we have 1 crore 10 lakhs, from which we can subtract 16 lakh 57,500. Okay, 19 lakh 89,000 and 65 lakhs. 8 lakh 53,500. 8 lakh 53,500. Right, so now I have my amount for cash, and therefore we are in a position to calculate the total assets. Now keep in mind, fixed assets is this much, current assets is this much. Instead of adding all of these people again, simply add these two. We have 1 crore 30 and 1 crore 10, which makes me realize we could have actually solved this a while back because we already had the total. We didn't have to solve inside. Anyway, now we can. So 1 crore 30 lakhs plus 1 crore 10 lakhs is going to give us 2 crores 40 lakhs. Okay, so we write down 2 crores 40 lakhs on both the sides. 2 crores 40 lakhs on both the sides, and then subtract whatever we have here. So we are talking about 2 crores 40 lakhs minus 55 lakhs minus 1 crore 10 lakhs. Okay, so we have 75 lakhs, and 75 lakhs is the total of these two numbers. Okay, the total of these two gives us 75 lakhs, and we can isolate them individually because the question tells us that their ratio is 1:4. Okay, so I'm going to do this downstairs. We have 75 lakhs to be broken up in the ratio 1:4. So 75 lakhs. Okay, so 1:4 means one time into 1/5 and the other time into 4/5. Right, so we have 75 lakhs into 1/5. Okay, so I get 15 lakhs, and now I can simply multiply this number by 4 to get into 4/5, and I'm guessing that's going to be 60 lakhs, and you all can do the math. Okay, 15 4s are 60. Here we go. Okay, so 15 lakh and 60 lakhs. They've given us capital to reserves. So capital comes first at 15 lakhs. Capital comes first at 15 lakhs. Okay, followed by the reserves, which is 60 lakhs. With this, our income statement and balance sheet is done. I hope this has been easy to understand. Please give me your feedback and like, share, subscribe with all your friends. Good day.